Good morning, everybody. Oops, that's not what I want. Actually, I kind of want to go over something for some of you that have already been on these streams before. So this all is for you guys, this risk management and psychology lab, but there's some cool stuff that if you are struggling to be profitable, okay, 90% of it comes down to position size, knowing what your risk of your account blowout, and your obviously risk to reward ratio, and also a growth calculator. So this was created, but we just kind of amped up more things on here. So I'll talk about this first, and then I'll get into the fundamentals of trading futures. For those of you that have never traded, you'll learn what a tick is, all the way to how to basically get started. Sunday night come trading, right? As long as you know how to chart and you've got the charting down. But so position sizing, okay? Most traders fail because of risk management. That's not a secret, right? So plan your trade and then trade your plan, right? So let's say you're trading. I'm just gonna use $2,000 drawdown because a lot of people get the 50K accounts with prop firms. But if you want to follow along, you guys can just go to propfirmtrend.com and then just sign in to. It's under the. Oops. Right here, risk management and psychology lab. And there's actually quite a bit of stuff, also our mental state, things like that. But I'll just start here. So let's say you have a $2,000 drawdown, okay, and you're trading. We're just going to use some easy numbers because I'm not the best at math, so this is why this is so helpful, at least to me. Can you guys hear me on Twitter? Can you guys see the screen? Or on YouTube? Can someone just type before I start going over the whole thing and you guys can't even see what I'm doing? Okay, hang on. No one's saying anything, so hold on. Thank you. All right. Just wanted to double check to make sure I'm not yapping away and no one can hear what I'm, talking about. So this right here, position sizing. Let's say we do MNQs, okay? So what ends up happening, a lot of times people just jump in trading futures. The first thing that they start to trade is ES, NQ, the minis instead of trading the micros, okay? When I started trading futures, I came from options, so 3.5 years ago, I used to trade options, and when I came over to futures, at that time there were barely anyone that you could learn from that had all of the basics together. So it was a lot of trial and error, and I wish someone had told me at the time, "Hey, trade micros." And this is, how to get started and all of that instead of, as you start, you have no one to really help you. So yeah, you're going to do trial and error and blow money. So another thing that happens is you learn bad habits, right? Even on your sim accounts, when you guys go and play around with NQ or ES, believe it or not, that transpires into your actual trading, because you're going to start seeing big P&Ls, and it's a dopamine hit, and you're going to continue to want to get that hit each time. So the best thing to do is to start with the micros. You can scale with micros. So here, let's just say we've got a $2,000 drawdown. Let's just say we have a 10-point stop loss, which is a really, really tight stop loss. Most people have like 20, 30, 40 points for a stop loss. I have typically 10, and I've actually adjusted it to like 12.5 points lately. But just for the sake of this demo, let's just say 10 points, okay? So calculate your position size. So let's just say you typically the way you should risk would be anywhere between 1 to 2%, or maybe even 3% per position. And anything above 5, like if you're 5%, it's more of a aggressive, but it is it can be used if you have a really good like A+ setup. um, you know, but if you go to like 15%, some people will do 50%. Trust me, I know. I've seen this. So let's just say, I don't know, for the sake of this, we'll just do 5. Okay. What ends up happening is, so again, this is per trade. Okay. Um, I see a lot of people sizing in. They're trading 50% of this $2,000, or they'll do 20%, but the point of it is that you're trying to grow these accounts, and if you want to be a trader for the long game, for the long run, then you need to really size properly. Sure, you're going to get nice, a few times you hit, 50, if you full port, make money and stuff like that. But let's be real, that's not, you know, uh, that's not going to happen. That you can be consistent with that. So let's just say you're able to use 5 contracts. You're risking $100, which is $20 per contract, right? So using that scenario, you're risking 5% trade. You can have 20 losses until, reasonable buffer until your account is basically blown. Okay. So let's just say we increase it to 10%. So up here, we do 10%, it's 10 MNQs. You're at extreme risk. Okay. Now you've got 10 losses. You're going to blow your account. Well, let's change it to 20%. You've got 5 losses until you blow that account. So even down here, it will tell you if you had 3 losses at 20%, you would be down $1,200, which is basically quite a bit of your port. Okay. And here, actually, let's just say you have a 1-to-1 ratio. We can do even more. Now let's just do 1, okay? And then we can always change this. So 3 losses, $1,200. In order for you to recover, you need 3 trades of $400 or more to just break even, okay? That's if you are doing a risk to reward ratio of 1-to-1. If you're doing, let's just say 3-to-1, then you just need 1 trade that's going to be of, $1,200 or more. Or I don't know, let's just say 5. Then you're going to be over, 1 trade to make up, up to $2,000. If you have 10 losses, obviously you would have blown your account at that. So you can go in here and kind of play around and see the best way to grow your account safely. This is a moderate risk. 5% is a moderate risk. Okay. Risk to reward. Let's just say most people get 2 to 1, if even that. So down here, you can kind of, you would basically win twice what your risk is. So you just need to be profitable 34% of the time to, break even. And then anything above that is obviously profit. If you are doing 1-to-1, your win rate needs to be 50% or more. And that's like, your win equals loss. So the higher your risk to reward ratio, obviously, you you can be profitable even at just 10% of the wins. So this is why our losses need to be smaller than our profits. The issue that I see a lot from getting messages and stuff like that from members is that it's the other way around. They're going to risk $100 to make $20, or they're going to risk $500 to make $100. You don't want that. That's a bad risk to reward ratio. So here, like I said, you can go in here and just kind of play around with the numbers. And then down here, let's just say you have a $2,000 starting balance. Your risk per trade is, I don't know, we can say 5%. Okay, you've got a 2-to-1 ratio, or even a 1-to-1. 1-to-1, you need a higher risk win rate. So typically, you need a higher, like 70 to 80% hit rate in order for you to use the 1-to-1 ratio. And this is, let's just say you take 3 trades per day. It will tell you, what you're expected to make if you're doing 5% per trade, $40 daily, $120 weekly, it's $2,600, and look, monthly is $4,400. I know that when people look at P&L, they will actually they try to compare themselves to what people are posting on Twitter. Please don't compare yourself to somebody else or any P&L on Twitter, because everyone is at a different place. We're all at a different, our journey is different, longer, our risk tolerance is different. Maybe we've been longer in the game. Maybe we're having a really good month. I don't care how long people have been trading, if they've been trading for 5 years, 10 years, 15 years, all of us will go through periods of time where we have really good months and then really bad months. And that's normal. That's why, it's trading, but people go through phases. Okay. So the best thing to do is to start out small. So what? You're risking 40, you're making $120 a day on one account. So let's just say you have 5 accounts and you scale that. Okay. You can just do the math, doing that. So micros will still make you money. What's not going to make you money is when you oversize and you keep hitting big P&Ls, and then you're doing good for 3 or 4 days, and then the 5th day you blow it because you go on a tilt and whatever, right? So it's so important to just size down. Don't even look at the P&L, especially if you're brand new into trading futures. Even if you're trading options and you haven't been profitable, first focus on small wins, base hits, become profitable at that. So let's say you're using 5 MNQs. When you're profitable for like 3 weeks of consistently profitable, yes, you're gonna have losses in those days too, but overall you're up. Then you scale up 7 to 8. Same thing for 3 weeks. You continue, you get better. Then you scale up even more. So um, as you can see here, obviously your risk to reward ratio, the higher it is, the more money, even with just 5, um, where the heck did, no, sorry. So even with 5 MNQs, okay, if you come down here, you can see per trade, depending upon what your risk to reward ratio is, you're going to make money. Okay. Most people in their jobs do not make $200 to $300 a day. And that's, on an average median, right? If you can make $200 to $300 a day on one account and then you scale up, you've got 5 accounts and then 10, 20, whatever. It's better than trying to hit making $2,000 per account on like one account or 2 accounts, because what you're doing is spreading out your risk. And I know that when you size down, when you focus on just the strategy that you're utilizing, another thing I see is that a lot of people will test out and try, oh my God, 50 freaking strategies every other day, every other month. All you're doing when you're doing that is you are just putting yourself back. One month you're in ICT doing stuff. The next month you're with moving averages. The third month you're, I don't know, whatever is like out there that's new. Stop doing that. You are only delaying yourself, because what ends up happening is you're going to get analysis paralysis. Most strategies work, guys. So you just have to, get good at one strategy and feel comfortable in it. So if somebody's doing, just to give you an example, if somebody's trading um, ICT, that's fine. They're going to be, a lot of people are profitable with that. Not everybody, but that same goes for moving averages. Um, some people are profitable, others are not. So at the end of the day, what it actually really comes down to is risk management. So find something that you can see and replicate, and that you are right more, it's more probable than not that you're going to, make profits. Then you will stick to that strategy, whether it's, using pivots and just taking a trade off of the pivot, reading the price action. If it hits here and we hold, I'm going to get into a trade on a confirmation and let it ride with my 5 MNQs. You put your risk, um, profit target, your risk to reward ratio is great. It's not going to work 100% of the time, but even if it's, like if you see here, we just talked about it, even if your win rate is, less, you're going to be fine. So that's basically kind of the point of this, and to just, go in here and put in different scenarios. I typically play with at least the 5K or 150K, 200K, or 300K accounts. Because for me, I like to have more of a drawdown for more room for error. Um, I can size in 12 contracts doing that, right? Um, and it kind of changes. Let's see here. Oops, 5,000, that's not what I was looking for. No, here. So you can see, how numbers can change if you've got a bigger, account and you've got more room to play with. Okay. So I have had actually in my Discord, there was a guy that messaged me and he said, I've been trading for 6 months and I have yet to get a payout. I passed my accounts, but I don't, get a payout. So I asked him, I said, well, what are you sizing? Well, I'm playing, he's using NQ. And that's this guy here. And I said, okay. So he'll go in with, 3 or 4 NQs, whatever. And I said, how about, he goes, I'm at the place where I want to give up. I don't know what else to do. And I said, well, what you need to do is size 5 MNQs. Go back to basics. Size back down, or size down if you have never. 2 weeks later, I swear to God, 2 weeks later, he messages actually the whole Discord and he says, I am getting my first payout. And then his second payout. So it's like it took so long for it to click, like, okay, I am at a level where I'm gonna just quit, or either I can quit or just size down and see what happens. At this point, what are you gonna lose? You're, if you've got one more last try or whatever, just size down, right? So, but this is what most people see on Twitter with, sizing with NQs. And even with, having a bigger account, if you're risking 5%, that's only one NQ. But we see people trading 5, 3 NQs. And let's say, so 6 times, 6 losses at that, you're gonna blow your account. 5, 2 times. If you are trading 12 NQs at a time, that's crazy. But so the point that I'm trying to make, guys, is that really it's to stay in this game. Unless you've got a shit ton of money and you just want to blow money, then you know what, that's your prerogative. But I will tell you that sizing is the most important, and the mindset too. So another thing here, if you go to this is a psychology lab, but when you're trading, you got to have an honest self-assessment. Did you take a trade and you made some good money? Now you're feeling greedy. Okay. You might be a little anxious, but, or you might even be confident. You still, as soon as you start to feel a little greedy, it's an elevated risk. Okay. Even if you feel confident, so you need to proceed with caution. If you become, I don't know, let's just say vengeful, anxious, it doesn't matter. You can add different, just, if you're bored. That happens to me. If I sit around at my computer and I get bored, I will take trades that I should not take trades. So you can kind of go in and continue with your bias checkpoint. Okay, do I have a herd mentality? I'm following the crowd without doing any analysis. Then, put your information in here. What's going to end up happening, this is another risk setup. So if you're kind of going through that morning bias, you put your risk setup. Let's just do MNQ. Dashboard. It will kind of at the end, it will tell you what your pre-trade summary was, your mental state. I was greedy, I was confident, and then I got bored, and you'll see like, okay, this is what, my pre-trade prep was. But then my post-trade, what happened, I took whatever trades you took, whether you had, some lessons you learned, you log that, okay? Over time, you're going to see your analytics. So if every single time you feel, where is that little mental state? You feel greedy or if you feel, let's just say, vengeful, we know that tilt is going to, so as soon as you start having the feelings that where you end up with big losses, review that. And when you start to get that feeling, you shut down your computer. It doesn't matter, you just shut it off because you the market's going to be here tomorrow because you are going to notice a pattern because we're all different, right? Somebody may be bored and might not touch the button to trade, but for me, if I'm bored, it's like it's like don't touch it, don't touch it. Ah, fuck it, I'm just gonna touch it. So again, we all have different, and people will say, "Oh, don't, no emotions in trading." Yeah, okay, we're human, we have emotion, and all of this is emotion. Whether you're confident, whether you're frustrated, whether you're tired, these are the things that have an impact. You know, uh, you can rate your intensity. Maybe you're feeling just a little, tilty, revenge trading, right? Um, but at the same time, just be honest. And over a period of time, over 30 days, you're going to look at your patterns and say, well, when I'm feeling confident and focused and calm, I have, met my profit targets. I'm green for the day. I close down. I feel good. Um, and you're going to notice a pattern when you're greedy, when you're vengeful, whatever, bored. What happens then? Maybe you had some big losses. Maybe you just came out break even. Maybe you gave back your really good profits. So then okay, I'm at a higher risk. I'm not trading this. So th- the thing is, when we're trading, no one is there to tell us, don't, we have to be our own boss. We have to, we are all responsible for our own actions. It doesn't matter if you are in a Discord, if you're watching a stream, whatever you're doing, that needs to be that's confluence. That's not let me follow, the exact trades or follow this person or that person, because at the end of the day, that is just not gonna work. If you want to be in this game for a long time, then you need to learn yourself and use that, use it as a crutch, use it as confluence, and say, hey, look, I feel the same as Minx does, because I think we're gonna go short or whatever, and or I don't, I don't want to short. I think we're going to go long. So at the end of the day, kind of see what others are thinking if you're looking for confluence until you kind of get it, get better at it with yourself. So that's just, I kind of wanted to touch base on that because I feel like I see so many people getting into futures trading, and they're blowing their accounts left to right, and then they start blaming the prop firms, or even this goes even if you're trading your own account. You can trade your own, you can put $2,000 in a Trade of 8 or Ninja Trader and trade. You don't have to go through prop firms, but you also need to understand the risk, and are you willing to lose 2 grand or 5 grand versus losing, I don't know, $100 or $50, whatever, you're getting, especially while you're learning. But at the end of the day, it levels out that playing field, and it is always about risk management. So that said, um, do you guys like this? Do you guys want me to kind of? Do you guys have any questions? Somebody said, hey, I trade only 2 minis. That's why I am on 10 antidepressants. No emotions, baby. Okay. Yes, coulda, woulda, shoulda are the best traders on Wall Street. Know your risk is key and had to go in multiverse to confirm. Yeah, I agree. It's always like, if I did if I only size down, because I have seen it with even with myself, if I oversize or if I over leverage, And had I just not, had I just stuck to my own, contracts that I used, not oversized, even for holding off for like a minute or two, it would have worked in my favor, and I wouldn't have had a bigger loss or something like that. We see it happen every single day. But when you're sized down, hey, I can take, more losses if I need to. Or you can also, this here is based on 10-point stop loss. Like I said, a lot of people have a higher one. That's okay. It will then resize your contract amount. So yeah, I'll change that bot. Okay, let's see. I don't know, I kind of went off on this tangent. How many of you have never traded futures? Are you all pretty good at, do you know the basics of it? Like, because this is usually what I do is trading resources. On these webinars, I kind of go over futures trading. Actually, the funny thing today I saw was a futures trader who is apparently a pretty big trader. Maybe I'm not gonna name the person, but he lost his accounts because he went in to trade gold. Okay, so he traded gold, and apparently, even after years of trading, didn't realize that they expire monthly. And he did not roll over to February. He was trading the December. There's no liquidity in there. So of course you're gonna, as soon as you get in, you're gonna lose. There's nothing. It's illiquid. And it's mind-boggling how some of these influencers or whatever are trading, and and he had the audacity to post that he lost his 3 accounts or 5, I can't remember how many, because he was like, he entered, and within a millisecond he had blown his accounts, and that shouldn't have been it, because and it's like, really, if you don't. And he said, yeah, it was my mistake not rolling it over, but that's not, and it's like, well, apparently you don't know how it works, because you need liquidity, somebody to buy those contracts, which everybody's moved on to February, buddy. Was it a sim account? No, it was like funded ticks or something, funding ticks account that he lost. And he's trying to blame the prop firm. And the prop firm, I mean, it's clear, even like from his because he posted his executions. It's clear from his executions why, it was the way it was. And again, there's a reason, like, you need to know, as a trader, whether you've been in it for a little bit longer or not. It's not just trade, the P&L. There will be times where you might accidentally get into a wrong contract, which is a little hard given that everything rolls over. But let's just say you do. At least you're gonna know, okay, shit, I made a mistake. I traded something there's no liquidity on, Um, so you need to kind of, if you want to be part of the 5% of traders that end up making it, you have to continuously learn. And as soon as you stop learning, you're gonna stop progressing, and um, it's you're not going to make it. So I'll go over some of these. I'm not going to go over through everything, but basically futures contracts, they're available in many different assets, but if you're trading like equity index futures such as S&P 500 or Nasdaq, they expire quarterly, which is March, June, September, and December. So like here in December, soon we're going to be rolling over our contracts to March. Okay. And it's going to be an auto rollover. You're going to get that notification from your broker. It's going to just roll it over, right? However, if you're trading, interest rates, or if you're trading commodity like crude oil, currency, metal futures like gold, they expire monthly, and you need to check to see. Again, it's going to auto roll over, but I don't know why that person decided to play with the December contracts. But regardless, you got to know where liquidity is. If the chart looks really funky, here, maybe I can pull it up so I can show you guys. Also, guys, I know it's a Saturday, but I live in Antarctica. It was like minus 23 the other day, so I don't have anything better to do than to try to come here and help you guys, learn. I learn with you all too. But let's say we go to GC. This is what he was trading. If the chart looks like this, are you going to trade it, or are you going to say, okay, something is clearly not right with this? It doesn't matter how long you've been a trader. If you see candles like this is the gold December contract. Let's go back to GC. Had he gone into January, even that's more liquid, but a lot are already moving over to February. Okay, so you can see, the open interest. But if you kind of just check, just by looking at the candles, the difference between GC December. Okay, you're not going to trade this. Now, if you were trading a month ago, look, candles are normal. But then they started kind of getting wonky. So that's what people need to understand. So let's see. Lot or contract is obviously the unit of the instrument. Tick is the smallest price movement that a futures contract can make. $1 move or one handle is called a point. Globex is an electronic trading platform used for derivative and commodity contracts, but traders also use the term Globex, meaning the overnight session. So if they're trading like Asia at night or Europe in the middle of the night, they'll say I traded Globex. Margin is the amount of money required to be deposited by a trader to open a futures position. Also, if you guys have only traded prop firm accounts and not your own accounts, you can do both, okay? And I'll kind of show you guys an easy way. In Antarctica, it's a joke. I really am in Midwest where it was minus 23. So I don't know what it is today though. But so there are 4 ticks in each point when you're looking at S&P 500 or Nasdaq. So ES contract changes value by $12.50. So for every 0.25 it moves, it's $50 per 1 point. with futures, these trade. Okay, so the most often used futures that we as retail traders is, ES, MES, which is more like SPX and SPY. NQ, MNQ is like the NDX or QQQ. CL is for oil, GC is for gold, but these trade in a manner more akin to shares than options. There's no theta, no IV. Stop losses can be placed at precise price points. And each futures contract has its own specification, including the size of the contract, the tick size amount, which is that minimum price movement, and the delivery date. Micros, so micro minis are 1/10 as small as E-mini contracts of the same type. So, one ES mini contract changes value by $12.50, but if you look at the micro version, it changes value by $1.25 for every 25 cents it moves. So if you're trading NQ, it's $5 per tick, or $20 per 1 point, or one MNQ is 50 cents per tick. Okay. If you're looking at oil, so this is one thing. When I said, when I started trading futures 3.5 years ago, coming from options, I was basically, like I said, doing a lot of trial and error. I get into a trade on oil, okay, first time, and I was down $80. So I get in, I'm down $80, and I'm like, what the heck? Why am I down $80? It hasn't even moved. So I'm thinking it's like a, glitch or something, right? Well, I didn't know that one CL or one, oil change was or change value by $10 per tick, which is $10 per 1 penny or 1 cent. So each penny is a tick. It's worth $10, and each dollar, so 1 point, is worth $1,000. So if oil is trading at $60 and it moves from $60 to $61, so that $1 change is $1,000. So yes, it was down 8 cents. That's why I was down $80, and I didn't. So if you can see how it differs. So some of them have 4 ticks in each point, and some of them have 100 ticks in each point. So just to kind of give you guys a contrast of what it is. But futures market is open 23 hours a day. You must typically close out your position by 4:59 p.m. Eastern if you're trading, funded prop firms. It depends which firms too as well. You need to check the hours with them. It opens Sundays at 6 p.m., closes Friday at 4:59 p.m. Typically, the best times to trade would be during the New York Stock Exchange market open, or during European markets, which is in the middle of the night. And then also you want to check with the holidays because they are not the same. Hours vary between, New York Stock Exchange versus, CME or futures, what we were trading. So sometimes, a lot of times they're closed and we're still open. So this here is kind of like a little cheat sheet. You guys can check, S&P 500, ES, 0.25, what the tick amount is, $12.50, and then the 1/10 of the size, which is that MES. And then you can also go down here, check what NQ changes, and also like a daily average move per one contract, right? And how much the 1/10 of the size is. Go down to crude oil. I don't know, maybe you want to trade soybeans or something. Some people trade euro. I don't, but so there's different ways of getting funding, and I'm going to go over funding with your own accounts. So you can trade micros, which cost roughly like this is if you're using traditional brokers such as like Interactive Broker or TOS. It's $2,347 for an MES lot, okay? And it's about $23,000 for one ES lot. So you want to check with your broker how much capital you would need and the margin. But basically, you can, the second way of funding your own account would be to use a broker that specializes in futures. That's NinjaTrader, Trade-O-Vate, AMT is one of them. I believe Webull is another that I'm not 100% sure if they offer the reduced margins. I know that they you can trade futures on it as well as on Robinhood, but I need to actually check in if they offer reduced margin. But instead of the 23,448 for traditional broker, Trade-O-Vate offers a $500 to $1,000 day trading margin for E-mini contracts. So micro contracts are even more affordable because MES costs only $50 day trading margin, and MNQ costs $100. And if you are, let's see, for NQ it's $1,000. Or if you are wanting to swing, so let's say on a Friday you want to swing over the weekend, one NQ contract, just to give you an example, you would then need the $33,000 initial margin. And or if you're trading ES, it would be $23,000 for an initial margin. So I'll explain in a bit what the differences are. So Trade-O-Vate, this is right here is about Trade-O-Vate. They offer reduced margins for both the day session as well as the overnight session. And reduced intraday margins are currently available from 6 p.m. Eastern until 4:45 p.m. Eastern the following day. Okay, so if you look here on the right, there's a little column where it says initial margin, and then there's a day margin here in the left. So the initial margin is required between 4:45 p.m. until 6 p.m. Eastern. So basically an hour and 15 minutes. So if you're holding a position at the close of the market, so you want to hold between 4:45 p.m. and 6 p.m., then you need to have the initial margin, which is let's say you're trading NQ, just one NQ is $33,000, okay? Or if you're doing the micros, it's $33.84, okay? However, as a day trader, as a scalper, I don't need to have this much in my, broker to trade the day margins. So I can still hold the position from 6 p.m. until 4:45 p.m. the next day, so almost 23 hours, and just utilize the day margin. So NQ, it's 1,000, but if you're playing with, MNQs, it's $100. Okay. If you're using MES, it's 50, ES 500. So that's what that basically means. But if you want to swing trade, then you need the initial margin. So, and also I think that an account minimum is only like $250 to open a Trade-O-Vate account. So, you can trade like, I don't know, MES, MNQ, that kind of a thing. So let's see. So basically, the distinction is, when you trade or purchase, when you purchase or sell a contract, you're not actually purchasing ES shares. Therefore, it costs the same amount of money to buy or sell one contract, regardless of the price at which ES is trading, and that's where that margin term comes in. So, if if people feel comfortable trading their own money, for me personally, I would utilize a broker that specializes in futures, and there are many out there, but it's actually fairly affordable, making it a good choice for those that are comfortable, trading their own money. And also margins do change based upon news event. So if you want to check that. So if you're like we're right around FOMC or CPI, then the margin requirements are going to be a little bit different. And then the third way is to utilize a prop firm. So you utilize a finance partner, also known as Tradeify, Apex Trader Funding, Take Profit Trader, the Futures Desk, Top Step, My Funded Futures. There are many others. So, like for example, Tradeify has a 1-day pass for evaluations. Top Step has a 2-day minimum evaluation, and um, it also depends on which accounts. Because, like for example, actually, let me pull up Tradeify just for a quick second to show you guys. Okay, so growth account. This basically is, it's a 50K account. Your profit target is $3,000. Your trailing is $2,000. So when we talked about the risk management calculator, you would input whatever your, drawdown is. So if it's $2,000, that's how you would calculate, right? There's no activation fee here, and you can pass it in 1 day. Now, if once you get funded, your payout changes. You can, payout frequency can be 5 days. Okay. However, if you choose this account, this is their new account, it's called a select account. Your profit target is only $2,500 here. Your max trailing is 2,000. But you need to trade at least 3 days. And no activation fee. But once you get to the funded, you can choose a path, whether you want a daily payout or it's a flex like every 5 days. Okay. So every single day, your max payout daily is 1,000, but there's no consistency once you're funded. So I actually got a few of these accounts yesterday, just because it's a new type of an account. And the third way is called Lightning, which basically means you skip the evaluations altogether, so you don't need to pass anything. You go straight into a no evaluation. You're funded instantly. You can have up to 5 accounts, payout frequency every 5 days, and your consistency needs to be 20% or below. And we'll talk about that in just a bit. But that's kind of what I wanted to show you guys, the difference between types of accounts. So how does this work? You basically demonstrate to the prop firm that you are a successful trader, and you must pay to enter the evaluation, which is a SIM account. If you succeed, you will then be given a SIM funded account to trade with. You pay the activation fee. Now, some firms don't have any activation fees. It depends on the accounts and prop firms. Some do. So you just kind of want to, check to see. And this, like right here, is from Apex Trader Funding. So you keep all of the proceeds up to $25,000, and then you keep 90% of the profit after the first $25,000 you earn, while they keep 10%. So it's a profit split. Some firms have 80-20, so they keep 20% while you keep 80. And also, some people will get multiple accounts when it's on discount, so they can trade them at the same time. There is a trade copier you can use, and each account must pass the performance evaluation, as they are all standalone accounts. So, is this too good to be true? Not really. Most traders fail due to lack of discipline, and this is how these companies make money. Okay. Now, it's not because these companies, innovated something new to make it work in their favor. It's because that 95% of traders will fail, whether they're trading options, equities, futures, with their own money, with their grandma's money. It doesn't matter. The statistics are that traders will lose, and then they give up, right? So this is how this basically works kind of in their own favor. However, if you stay disciplined, what we talked about, you size down when you start trading futures. So imagine if some of you are trading options, okay? So imagine you get a 50K account and you've got a $2,000 drawdown. So let's just say you're trading options and you have $2,000 in your account, your own money, doesn't matter. And the first thing you do when you're trading options is you go for trading SPX or NDX. I don't have to tell you what's going to happen to your account real fast. So most people will go, and stick to SPY or QQQ. And the same thing goes for futures. If you come in and you're trading NQ, you're trading ES on a $2,000 drawdown, your account's going to be blown. So what you need to do is size down to, MNQ, MES, MGC, so the micros, and scale from there. And that's the difference. It's really the risk management, and also, being consistent. The worst that can happen is you lose your account evaluation fee. You do not pay back any capital. I get questions all the time. Well, do I have to pay back, the money that I've lost? No, there's not. You don't. There's no. Basically, you don't pay back any capital. You just, if you bought an account was $100, you're gonna lose $100. Okay. So that's, maybe your time or whatever. But and also you can take these evaluations typically as many times. It's not just once and that's it. And another thing is you can trade your own funded accounts, like on NinjaTrader, with your prop firm accounts. So you would just have to sign up for a personal account and fund it yourself. And once you're funded, you could connect them all together. So why would someone choose a prop firm versus trading your own money? And this is from Take Profit Trader, but simply put, most traders are undercapitalized, and you level the playing field by using their accounts, not your own funds. Trading your own funds can lead to severe losses. However, with prop firms, your losses are limited to your associated challenge fees. And all of the technology and account setup is done by them. So there's no more documentation, no painful account setup experiences or anything like that. And also lack of discipline hurts or haunts traders. And the risk management system and rules will make sure you stay disciplined during your trades. Okay. Now, there are different types of drawdowns. This is another thing where people do not understand what this means. Some firms have intraday trailing, some have end-of-day trailing, and some have static. Some have, end-of-day trailing and static, or static and intraday trailing. So it varies by accounts, right? So how does this work? So basically, your drawdown is the maximum loss allowed to have before your account gets breached. Okay. And understanding how it's calculated is crucial risk management. So you want to choose the right prop firm approach for your type of trading. Intraday trailing, so your drawdown limit moves up with your balance and unrealized gains throughout the day, but it resets to the daily starting balance each day. So, for example, you're trading a 50K account. Most of the time, the drawdown is actually 2K. Apex Trader Funding has 2,500. So it just kind of depends, I think, with, I don't know, I need to update this not to say 3K, but let's just stick with the 3K since it's here. So let's say at 10 a.m. you make a $500 profit. Your balance is now 50,500. Your drawdown moves to 47,500. At 11 a.m., you make another $300. You're at 50,800. Your drawdown moves to 47,800. At 1 p.m., you open positions with $600 unrealized gain, 51,400 unrealized. Drawdown moves 48,400. It trails unrealized gains. Okay. Let's say at 2 p.m. you close your position for $400 profit, which you're at 51,200. Drawdown stays at 48,400 and it doesn't go down. And then let's just say at 3 p.m. you lose $400. Your account is at 50,800. Your drawdown stays at 48,400. It doesn't go down. So your remaining drawdown is $2,400. These accounts are good for those that take base hits, are more of scalpers. If you are a person that holds likes to hold a position, for example, all day, and it goes up $1,000, and then you let it come back all the way down to break even or at a loss, this is not going to be the account for you. So, um, if you and I do want to mention though, once you get into the funded stage, so let's say you pass your account, um, your profit, you made your profit at $3,000, you get a sim funded account, um, then your drawdown limit actually becomes static, and I'll talk about that in just a second. When you are at uh, your account becomes static once you go over your drawdown amount plus $100. So for in this scenario, if you're at 53,000 plus one plus 100, so 53,100, and your account goes up to 70 grand, just to give you an example, you can lose $10,000, $15,000 and you're not going to blow your account. So that unrealized, intraday trailing, it stops at your drawdown plus 100. So you you want to check that with firms, but let me just grab a sip of water. I've been kind of yapping for a while now. Okay, so end of day trailing, your drawdown limit only moves up based on your ending balance at the close of each trading day. For example, a 50K account with 6% or 3K drawdown. Day one starts at 50,000. Your drawdown is 47,000. Your total drawdown available is 3,000. During the day, let's say you're up to 51,500, then down to 50,800. Your drawdown stays at 47,000 all day. Your total drawdown available is 3,000 because it stays fixed all day. And let's say your day one closes at 50,800. Then your drawdown updates to 47,800. And then your day two, you start your balance at 50,800. Your drawdown is 47,800, which is $3,000 from the new starting balance. Okay. Static drawdown is one of my favorite, especially if you have a really good firm that the futures desk that has a pretty good static. Okay, let's see. That TFD customize. So you can customize these plans. So basically, what this is I have the $6,000 drawdown. I'm not sure why. Okay, there we go. I was about to say. So the way it works is your drawdown limit is fixed based on your starting account balance and never changes. So for example, a 50K account at 6%, which is let's just say $3,000. So your account starts 50,000, drawdown 47,000. Week one, you grow to 55,000, drawdown stays at 47,000. Month one grows to 60,000, your drawdown stays at 47,000. Month six, your account is at 75,000, your drawdown is still 47,000. So reality check, you can lose $28,000 or 75K minus 47K and still breach the account. But this mimics more of like a personal account. So as you can see, different firms have different rules, different accounts. Don't, as long as you're informed what each means, then, you know, uh, you can make the right decision what is right for you. Here, you can kind of see this is just a little of like a comparison, but actually, we'll start here. Here you can actually compare. So let's just say Tradeify. So this is the new select account where you can actually start withdrawing money daily. Let's just put Top Step 50K account. And so notice here the profit target is only 2,500. It's an end of day trailing. And here your profit target is $3,000, 2,000 end of day trailing plus activation fee. So if you compare the two, your final price, Top Step 198. Actually, I think that they changed some of their what is it called? Sizing, not sizing, but price. So they changed a little bit of their price. So this might actually be a little bit less than 198, but it's not as much. If you can still choose this account, this price, along with a different one where you pay more, but you get, there's no activation fee. So one thing I was telling you guys about the consistency calculator. So imagine you need to meet $3,000, okay? So for Top Step, you have a 2-day at least trading. Your overall profit, let's just say, is 3,000, okay? That's to pass the account. Let's say one day you make $1,700. Well, you need at least 50% or less, which means you're over you're over 56% of your total profit. So the way is, okay, if you did 1,500, you would be at 50% or less, which means you would pass the account. Or, if you did make $1,700, then your profit needs to be, I don't know, let's just say, okay, if it's at 4,000, you're going to be, so you just need to kind of, either get your profit back up or lose some money if you made more money in one day trading. And then for, Tradeify has, consistency as well in their funding or in their evaluation for this select account. So overall profit is 2,500. Let's say you made $1,100 in one day. Well, you would be over 44%. You need to be at 40% to pass that account. So the rest of the days you can just make, I don't know, let's just say you made $700. That's great. You would be, technically as we trade and as the time goes, you're going to have days that are really obviously high. You're going to have days that are low. But it tends to even out, and you become consistent. You'll see like your consistency is going to drop. You might think like, oh my God, 20% is really hard. But as you're trading, you're going to be at, there's, like 10% or 15% because over the course of like trading, it will even out. So you can compare different firms. You can compare a same firm with different account sizes and see what the, cost would be. Then, whoops. Another thing you can do here. These are some of my favorite. They're featured firms just because I've tested them and I have vetted them. And then you can compare some of the tables, the trading rules, the evaluation rules, and then the payout rules between different firms. But let's say you want to go all the way down and you are just interested in static accounts, to give you an example. Whoops. Or end of day. So you can select which firms have that, and then, oops, scroll over and kind of see how much funding you can have. And then if you click on this like full details, this is a condensed version of like what the prop firm offers, different types of accounts, just kind of like it's just more of a condensed version. Like if is news trading allowed? Yes. Manipulative trades? No. So like bots trading? No. And then you can also visit their website and kind of check all of that out. Go back and show you guys what the okay, so this here is a Project X platform. It is used by many firms, but TopStep X or TopStep owns Project X. It looks kind of like the TradingView platform. If we're going long, you're gonna either buy market or join bid. If we're going short, you're gonna sell market, join ask. So you input the contract amounts, and then up here, whatever if you're trading MNQ or NQ, and then in this little settings button, you can trade copy your accounts. You can add some extra risks, like risk measurements, things like that. This right here is NinjaTrader platform. I use NinjaTrader just because I can add third-party add-ons, which is order flow footprint that I cannot do on Project X or even Trade08. So same thing. If we're going long, you can buy bid, you can buy ask, you can sell market or buy market. If we're going short, obviously sell market, sell ask. If let's say you get into a position, you went long, but you meant to go short, you can hit this REV button, which is a reverse button. But I like this is what I can add on, which is the order flow footprint. I would say 95% of traders don't use this, so you don't have to worry about it. But it basically lets me see inside of a candle what's kind of going on, and that to me gives me edge when I'm trading. So this is Tradeaway platform. Most people choose Tradeaway platform. It's fairly user friendly, and same thing. We're going long, buy market, buy bids. Going short, sell market, sell ask. ATM is where you add your stop loss. Okay, when you're trading futures, especially if you're utilizing a prop firm and even your own money, have a hard stop loss before you enter a trade. Create this little ATM strategy and have a hard stop loss, because I can't tell you how many times people have blown their accounts because they think they're going to just hit the close button. The issue is that sometimes we get, especially over this past year, a news scandal, a catalyst, or a Trump tweet, or something, and it will, go down 100 points in milliseconds. By the time you hit close, uh, your account, or not your account, but your trade, your account might be dead. So either you have, either you control it, where you have your stop loss, or the market's going to just auto liquidate you, and that's going to be your stop loss. So you choose. Okay. Let's see. So basically, the key points, the takeaway is that if you know how to chart, just like you would, with SPY or QQQ, um, you can use that same charting on trading S&P 500, which is ES and MES, or NQ, which is NDX and QQQ. While this is considered easier than options, it is in respect due to no Greeks. However, most of us struggle with risk management, FOMO, and mindset. So, like I talked about, consistency is key and sizing down. Um, a few other things when I trade, I always will check the calendars. So, do we have any? I don't know, let's go to visit this and go to next week. Okay, Monday, nothing. Okay, Wednesday, red folders. We've got FOMC and FOMC statement. A lot of firms, statement, and then a press conference. A lot of firms will not let you trade during the news, but also some will, and some will only allow it like a minute before or a minute after. So you want to check to see and do your due diligence. And that's like when we have the red or orange folders, see which ones. But like, the yellow folders and stuff, you're totally fine. So again, you want to check on that. Um, I always check, bar chart or Benzinga, and I've got Financial Juice in the Discord, like just to give us the a news aggregator that delivers breaking market updates as we're trading. So that's something that you should always have. And when you're trading like NQ or MNQ, it's the same thing as far as like the price movement. But I always have my the Mag 7 up. So I'm watching what, NVIDIA is doing, Microsoft, Amazon, Google, things like that. So that because it does have an impact on what's going to start, happening with NQ. So that's kind of like your confluence. Watch that as well. Let's see what else. Oh, here, you guys. If you are trying to journal like with your own Excel spreadsheet or something, you can just use this. This is free. It's stored on your local, computer. You just can import your, CSV, and kind of tell you your trades and help you with, your analytics and things like that. This is a demo account, so that's why there's nothing in here. There's a little AI mentor in here, and just kind of if you're looking for some help. Let's see, risk management tips, set goals, trading, review your strategy. You can do that. Another one is right here. You get actually you get the 30-day pro trial for free, and then after that you get 3 free starter accounts forever. And it's let me see. Whoops. Just sign in. And this is more like if you see TradeZella or any of that, and you guys can get it for free. It's pretty cool to have it. It actually can be linked to your accounts, and it will automatically pull from your accounts to kind of go over everything. So let's see what else. Also, guys, we did have Cyber Week. Check out some of these have really, really good deals that are ending. So some of them are ending tomorrow, some of them are ending today, some of them ended yesterday too. So there was something else I was going to show you guys, and I keep forgetting. It's not this, because we already went over this. If you missed the first part of this webinar, then you can go in here and play around with these risk management calculators, or your account blow up calculator. If you're down, how many trades you need to recover with, depending upon what your risk to ratio is and things like that. Also, growing your account. If your win rate is more, notice how it changes. If your win rate is, I don't know, let's just say 75%. So kind of tells you monthly and quarterly. So did I pull up TradingView? I did. Okay, just a second. I'll execute some trades. Show you guys just, if you've never seen futures, how it gets executed. We'll start with NQ. Okay. Okay, let's see. Okay, so let's say you're playing with NQ. Okay, I'm just going to say NQ at this point. And we'll go short. Okay. I think you guys can see that. So notice how here it moves in 0.25, so 0.00, 0.25, 0.50, 0.70, or 0.75, not 70. Do I do a little bit faster? Okay, let's say, okay. Flattened. Where is a trading panel? Play trading performance. Okay. So just one contract that was, in hindsight, right? $3,000. But let's say we went long there. Then obviously we would have that loss, right? Now this was on the 1 minute chart. So let's say you got into one NQ and you walked away, no stop loss or anything, and you were in the wrong direction, you would have pretty much blown your account. Even if you just sized in with one contract. Now look how much even further it went. Okay, let's say we do leave. Let's start it again. We can do, we'll do MNQs. So we're still in a December contract. Start here. Start new. So we're in MNQs, trade. Let's say we do 5 MNQs. Or even 3. Let's just do 5. So see, even with MNQs, you can still make money. Which I didn't get out of that because this is way too fast. Anyway. But let's redo this, replay. Leave. Replay, start new. Trade. Let's say we went long, even with 5 MNQs, no stop loss, okay? And you had a $2,000 account. Look at how fast you would have blown it, even with 5 micros. So that's the point that I'm trying to show you guys is why having a stop loss is so important. Because here, you would have blown it, even when you're sized. So that's why it's always so important. I have seen influencers say no stop loss. Okay, and I also know that those are not profitable ones. So yeah. Sometimes these candles happen so fast, by the time you try to, close out your trade, you're already down like, I don't know, $1,000 in your DM account, you've got 2,000, it's like you lost 50% of your account for no reason. So always have a stop loss. Okay, let's see what questions. Yes, I can hear you. Why not use a continuous contract? Continuous contract on like NQ. So this one. Let me stop this. NQ. Okay, so notice, okay, this is actually a good learning point. So notice how here it says NQ1, 2, whatever, okay? And then down here it's got December, March, June, September, December. So it just kind of keeps repeating. And it gives you like an NQZ 2025. And then in December of next year, it's going to say NQZ 2026. So it goes, Z and then HMUZ, HMUZ. So why not, why are we not using the continuous? Well, because the continuous contracts are just data that's stitched, basically together with multiple expiring contracts it's just for charting purposes. They actually don't exist on the exchange. You can't place an order on them. So contracts, real futures contracts are actual instruments that are traded on CME, which they have, as we went over everything in the beginning, they have expiration dates, which is either quarterly or monthly. So NQ on S&P 500, it's quarterly. So they also have their own order book with real, like bids and asks and settlement obligations. So that's why it's only used. Um, your broker needs to have a real contract. So that's, continuous one is not. When you see people using continuous, I've actually saw people using these continuous ones, and it's just typically, hopefully they they're telling everyone that it's just for charting purposes. Okay, do you guys have any questions? Let's see. With MNQ for $100 per contract, does 100 become the max drawdown as well? JJ, can you explain what you mean by that? With a trade, you mean Tradeify funded? Tradeify. Oh, you're talking about the real funds. Yeah, so you need to actually the minimum. Okay, so I see what you're talking about for your own personal accounts. Yeah, so you are required to have at least $250 to open up a Tradeovate account. So if you use, you know, MES, it's $50. So you can get, it's $50 per contract. If you are using NQ, or sorry, MNQ, it's $100. So yes, that's basically what your drawdown is. Yeah. I mean, a lot of people have both. So they'll get like the, um, let's go to Tradeovate. Hang on. Does NinjaTrader or Tradeovate have the feature to drag the stop once entering on the chart? NinjaTrader does. Yep. So when I enter, it enters me with a stop loss, and then I can drag it. I can trail with it. I have not used Tradeovate in like 3 years, to be quite honest. So I don't know if Tradeovate does. I assume that it does. I believe it does, but I don't know. I haven't used it. And it's if you don't set a stop prior to entering, you can still add a stop once you with NinjaTrader. You can still add a stop once you have entered, but you would want to trust me when I say just go in and enter with a stop loss. You can always move it or change it. I don't recommend that, because that's when you start messing with your emotions, unless you're trailing. So what I do is, like, if I am in and I have my 10-point, stop loss, as it's moving, I will move my, stop loss to trail it. You just enter in with the ATM. Scale in, scale out, how to, when, and why. Well, that's kind of, based on your trading, Adam. Your strategy. Some people don't scale in and scale out. Some will just go in, let's say, with 5 MNQs, and if their risk to reward ratio is, 1-to-1 or 1-to-1 or 2-to-1 or whatever, then they'll, whatever their stop loss is, they'll just exit with that full, you know, when their profit hits, they'll exit the full. Some will exit, with I don't know, let's say 3 when it's their risk or their first profit taking or take profit. And then some will, kind of like let it run and place their stop loss and, a little bit above break even. So like for the runners, that's kind of what I do. I start scaling out faster because my stop loss for all of them is fairly like it's, in between 10 to 12 points. You, Oh, on TradingView, I don't use, so some people do use Tradeovate and then they use TradingView. I have not done that ever, so I don't know how it works, but I personally would not do that because I think there's a little bit more of a lag if you're using Tradeovate through TradingView. Yeah. So just either if you're going to use Tradeovate, just use Tradeovate. Don't complicate it and add, TradingView on. Let's see, any other questions? How many points or ticks do you use for a stop loss? Tradeaway does have trailing stops. Yeah. No, I think the person was using Tradeovate on TradingView. That's what the question was, and he couldn't. It wouldn't work. Everybody is different. Marita, I use on NQ, like I said, I have typically a 10-point stop loss. However, when it's more volatile, I will adjust it accordingly. So sometimes it's at 12.5 points. And over the past few days, I've been playing with 70 ticks. When we're like, just in the first 15 to 20 minutes. But the way I typically like to play with is if I'm in and I get stopped out or wicked out, I will re-enter. So if I say, I'm going to go short at 25,000 and my stop loss is, let's say, 10 points, and we go up to 25,015, obviously I would be wicked out. But then it returns below my 25, thousand, starts to come back down. I will re-enter when it's in my direction. But that's just the way I do it. Most don't do that. It's kind of subjective of how you are going to, trade. Let's see. What do you think the biggest difference between Tradeovate and Ninja? So NinjaTrader owns Tradeovate. So what they like with NinjaTrader, what you are able to do and you can't on Tradeovate is I can actually buy Tradeovate accounts and add them onto my NinjaTrader. So my NinjaTrader, when I'm trading, I can trade Tradeify, Apex, Legends, Lucid. I can trade all of the prop firms together. I have a lifetime license from NinjaTrader. So that's one reason. Second one is I can also add and buy like, third-party indicators or add-ons such as Orderful Footprint. I can't do that on Tradeovate. If you're using prop firms, most of them will give you keys to it. Okay, let's see. Any other questions? How do I read your footprint? Well, The way I use order flow footprint is, okay, so this is what it looks like. I mean, I use it around my key levels. So, if we are, this is an old one, geez. This is when ES was at 4,000. The good old days. Whoops. Yeah, so here's the stop losses for, this is an old thing. Where's my, I just basically will watch, the delta, and if we've got aggressive buyers or aggressive sellers, and if we've got some sweeps coming around, there's just a lot of different ways to look at it. I trade order flow footprint differently than most. Like I said, I will use it around key levels, whereas others won't. Um, to me, I've tried many different things or what other people have done, and it didn't work well for me. So, um, it honestly, it just takes time and practice. So you would have to know like my technical analysis in order to then even try to add on order flow footprint for that. You can still chart on Tradeovate, or I'm sorry, on TradingView. I personally chart on NinjaTrader, so I do have charting on TradingView as well. I don't really use it though, which kind of, I don't know, it's crazy. I mean, I have 9 screens and I've got TradingView on like 2 of my screens, but I don't really use it. Any other questions? Damn, 8 people entered to get a free membership, and I'm giving away 3. So 3 of you are going to get it. That's crazy. I guess people are allergic to free shit. What do you mean, how do you enter? I posted a link. Right here. There's a link also on Twitter. When you guys go in here, I'm going to show you. Even though it says there's 265 entries, what that actually means is that whoever entered, so see this little thing where you enter as like through your Gmail, you click on that and it's automatically going to give you 1 entry. But if you do click on these other ones and it takes you to whatever, then it will give you entries, and that's why there's 265 entries. Because some people went in and did all of these. Yeah, it gives you more chances for the ones that entered. Yeah, let's get this drawing for the 8 people. Yeah, and if you're already a member, you'll just get an extra 30 days. Okay, let me find, hang on. You guys have no idea how much wealth of information there is out there right now for trading futures compared to when I got started. And I genuinely, like, I've always taught these futures basics, and there are multiple like pretty big name influencers who have learned about trading futures through me over the past few years. Same people who have said that they will never trade futures, because they made millions off of their courses or whatever it is, and they still, went and learned from it. Um, I like I said, I wish I had. Oh, look at that! Now there's 28 users. Okay, good. I'll just wait a few more minutes. Um, yeah, but even if like just to go back through the website, I mean, like I said, all of this is free. You don't need a credit card. You don't need anything to log in here, and you can get all of your information. I could charge a lot of money just for this freaking calculator, thing. But I don't want to. I want people to feel that they are getting um, support while they're still trying to become profitable. And like I said, I personally wish I had, you know, you can go back through here, look at the futures trading. You can look at some of the few really short breakdown videos, strategies, risk management, all of that. You don't need to, search online for each and everything or each and different. There are also, I should have said this earlier, but there are a lot of, I should say, prop firms, guys. There's like 70 or 80 that are pretty well known, or like 200 from what I hear. Please be careful. I see a lot of people shilling every freaking firm out there. Just because it's a firm, it does not mean that it's legit. It doesn't mean that they're not going to rug people or screw people over. So, I have gotten so many different offers from a lot of firms, some even trying to pay me six figures um, to, partner with them. And I have absolutely declined it because um, I don't want to be, first of all, I'm not going to be exclusive with any firm, because when you do that, there's bias. And if I feel like one firm is better than the other, as far as, let's just say, their plan, or their discount, I'm not going to try to, be biased. In fact, I teach you guys how to trade with your own accounts. This is the power of this, is to like learn different ways of trading, different prop firms, different, like, what suits you. Not everybody's, gonna have the same goals or same, starting uh, capital, that kind of a thing. A lot, some of these closed, like this one and this one right here. A lot of big influencers shilled them really hard. And I said, even people in my Discord would say, hey, can we, you know, what do you think about, this firm? And I would say, nope. If something too good to be true, it probably is. A few months later, they both rugged people. The CEO was buying, like oh, was it Ferraris, Lamborghinis? I don't even know, watches, all sorts of stuff. And, they're in court for bankruptcy right now. The point that I'm trying to say is, just because somebody's posting it on their, and even if they have a lot of followers, please do your own due diligence. Even with the ones that I have vetted, like for my own, like some of the featured firms that I've vetted, do your own due diligence on all of these, because they're these are the ones that I've personally vetted. These are my favorite ones that are up here on top. There are actually, Alpha Traders is another one. I didn't fit everything up here, but yeah, just kind of, like I said, do your own due diligence. And um, you know, just because something is it's new and shiny does not mean it's good. Okay, I'll go ahead and oops, do the drawing. Thanks. I've worked, you know, really hard on putting that website together, and it's very expensive, to be quite honest. But it's good for me to, you know, have everything in one place, and I also know that others will benefit from it. And at the end of the day, that makes me happy. So, where is my thing? Quick draws, okay. Competitions. Okay, let me move this over here. Start now. Traders. Damn, what was the name of that? Competition. Traders Wealth Lounge, okay. Traders Wealth. There it is. All right, 3. If you guys like these, then if you use my code Minx on all of the, you know, you will get the best deal that the prop firm is offering at the time, even if they have their own little, you know, code or whatever. You're still going to get whatever they have going on. Okay, so these are the 3 people: Dan, Cedric, and Ahmed. Are you guys here? I mean, I need your guys' real name. Or, I mean, whatever you input here. And if they're not claimed, I'll redraw. Here's Cedric. Okay. You're gonna have to DM me with like whatever the email is of this Cedric guy, just to make sure. Don't be faffing with me. All right, all right. Just DM me here on Discord. Sorry guys, I'm on like 6 different streams at this time. Okay, Ahmed and Cedric. Okay, one more. Why were you not able to sign up? Ported here from Twitter Live. It was like a ghost down over there. It's the weekend. And also, I don't know why, but people on Twitter seem to be all right. Okay, Cedric, I got you. And Ahmed, DM me, please. Okay, looks like Dan is not here, so we're gonna do one more drawing. Yes. This Dan guy, nah. Oh, because you were supposed to. Okay, so go back to that link. You're supposed to scroll down and click on where it says, like, I think I just showed you guys. See this? You don't click on this. You click on these little, see this right here? This is how you enter. It's going to give you a bunch of different ways to enter, whether it's like with Gmail, your email, whatever. So Marita, go back in, and then I'll wait a minute. Is there anything else you guys want me to talk about while we're here and it's minus 20 outside? Yeah, Cedric already sent it to me. Okay, let's see. Yep, minus 20. Minus 23 was the other day, actually. You guys also know that if you go to the propfirmtrend.com and log in, is it here? Yeah, so see this thing here? It's free to Discord. You will actually get free analysis in my trading automatically for free. I'm not in their Discord. All right, I'm gonna do a drawing one more time. Repick winner. All right, Dan, this must be a glitch. All right, let's do a new quick draw with just one. Traders, wealth. Is this the same person, Daniel N? Please tell me it's not. I see your free analysis is amazing. I wonder what more I could get from the premium. So on the premium side, we've got a lot of seasoned traders, but we also have 5 analysts, and 3 analysts on the premium side. They're not like what do you call it? Not media, social media influencers or anything like that. They're really good traders, but they're not really on social media. But they are also live on leaderboards in, prop firms. So, and we live trade daily on Voice. So we've got, if you guys have heard of Rizzo, Matt, Emperador, Maximilian, or Ryan, Jolene, pretty active community, lots of other like seasoned traders that add in their like analysis as well in their, in different channels and stuff like that. So quite a bit. You'll learn a lot. We are not um, a signal um, Discord in a sense. So we'll put out our analysis, and I will tell you like where I'm taking a trade. I personally want people to learn what we're doing, and also, um, just so if I say, I'm shorting, if we go above 25,700 and hold over it on retest hold, I'm going to take a long, and then on VC when I'm there, if the price is, the price action is doing that, for me, then I'll take a long there. Or if it's for a short, I'll take a short there, and I will announce I'm going short or I'm going long, whatever it is. And same thing with the rest of them. So, but Jolene is she's a goat. She has no social media presence though. Very profitable. Mad003, he's on multiple leaderboards. Um, it's a she. She doesn't go on voice. How much is a monthly premium? It's $59. We've We used to have this for free, and honestly, most of us do a lot of stuff for free, including live trading for free. So Rizzo, myself, and Emperor, like if you guys ever go on Wolf Financial, the three of us are live trading on there for thousands of people every day. However, there is a delay from when we say something. There's about a 7 to 10-second delay to when you guys hear it on Twitter. So people that are in the Discord find that, NQ or MNQ, whatever you're trading, you could be in and out of a trade by the time, you hear it on the other side. So, but we do a lot of like, we've got tools like Edgeful and TPO. Rizzo teaches that. More advanced teachings. I do more basic teachings. My mentor is a retired market maker, David Green, and my other mentor is Peter Tuchman, which is, or who is, I should say, Einstein of Wall Street. Is there anyone in? Yeah, so I trade order flow. We also do have Bookmap. Matt trades Bookmap. And he's taught how to trade Bookmap. Yeah. Yeah, we basically, I don't, if you're a kind of person that's going to come in and try to like just, sit there and get a signal and take it and not, work on yourself, not work on your risk management, not try to figure out why or how we're taking these trades or whatever it is. I'll be quite honest with you guys. I don't want you in the Discord. I don't want you to pay even if it's $60 a month for something that you will, if you're not willing to learn how to fish, you are going to be fed for a day or two. I want people fed for life. I want them to use us as confluence to come through and really lock in and try to learn and size properly, that kind of a thing. And that's what we have a lot of people that, even if they cancel and leave Discord, we have a lot of returning, people that come back. So yeah, Peter Tuchman. Yeah. Yeah. Yep. That's my, Raska. That's my, mentor. I am a cat. I know how to fish. Meow. So yeah, we've got, different types of traders and analysts. And the good thing is that, it gives you a perspective with different types of trade analysis. You know, if you just sit there and watch and learn, like for example, I'm more of a momentum trader and a scalper, so I'll get in and out of trades faster. Whereas like Rizzo, he's gonna hold for a long time. Or Matt, he will buy. He goes and buys. You know, they're called dip buys, but he'll also get 100 or 200 points, 300 points. You know, from those levels. If they're not at his levels, he's not gonna get. He's not gonna get into a trade, right? Um, Jolene, same thing. She also does YM and RTY and others. You know, so Blaze, it's the best Discord with best analysts, and I've been here for a few years. Yes, Blaze, thank you. Look, I hear the saying like if you make so much money trading, why do you have a Discord? Look, I'm gonna trade with or without Discord. First of all, second of all, I as a we get lonely as traders, and having a community is great. We used to have this free completely for everybody, and it gets flooded with people who are not serious. So it when the Discord was free, um, people would come in and expect, and we provided just the same premium as as it is right now. And what ends up happening is that it gets flooded with everybody has an opinion. Everybody has the best analysis, even if they just started trading 3 days ago. You get a lot of people that are not serious and they're trolling. Then um, uh, there's so much bias, whatever it is. It it's hard to manage. I'm not going to be babysitting on on uh, on here. So also what I have seen and noticed that people, even if they have a little itty bitty amount of money in skin in the game, they're going to take it more seriously than when something is just for free. And one of the reasons I know too is because given who I am in a lot of like free discords that are, they charge 100, 200, $300 a month. And, it's free for me. So I don't I mean, I'm not going to utilize anybody's Discord anyway, but I don't even, like if I was paying for it, I would go in there and check. Does that make sense? I was one of the guys that left and came back. Raccoon convinced me that it was the best thing to do, the best move I've made in 2025. That's awesome to hear. Thank you. Yeah. How many of you have been in free discords and have only just lost your ass? I know even when I go like visit free discords, all it's just everybody's just talking, trolling, talking crap, this and that, and we're more of a serious Discord. We're more of a family oriented. We help each other. We have accountability groups. Um, everybody is there to help each other, and all it takes is for you to ask for some help. And I've had people, go in the accountability group, ask me specifically for help. And look, we don't charge for courses. We don't have courses. We have a lot of free stuff. I give analysis for free. I live trade for free on Twitter. My website is free. So we're genuinely trying to help people with or without, you know, pay, but I want you guys to get value out of it. So if it's, 5 analysts for $60 a month is, I promise you guys, when I say that it's peanuts, if even anything, it's lower the minimum wage considering how much time. But I know how it is being in free discords and being in lose, like when I used to be like 5 years ago in free discords, and just you're losing your ass because everybody's like, hey, it's a long or it's a short, or it just messes with your mind. And the amount of time you spend trolling instead of the amount of time that you should spend around the people that are serious just like you are. If you want to be a good trader, if you want to be a serious trader, you need to surround yourself with those types of people, because they will say, the saying is that show me your friends and I'll show you your future. And that's the same thing, even on Twitter, or even like if you're following the streamers that are just so toxic. And a lot of a lot of times, people are not going to be profitable because you're just not taking it serious. And this is your money, so either you lock in and take it serious. And don't get me wrong, it's not like we don't have fun in our in TWL, but at the same time we focus, being more serious. So to be honest, instead of copy trading live traders, people need to adhere to one trading system of their own that has been rigorously backtesting. Absolutely. I completely agree with you. And that's what I say. Like, if, my trading analysis, Jolene's, Rizzo, Matt, we, Emp, we all have different trading styles and we do webinars. Some people will gravitate towards my analysis, and many others will gravitate towards Rizzo's, so when you kind of learn what somebody's doing, and you um, make it your own, obviously, and you learn that, hearing someone else see what you see on the chart is just confluence. Like, I feel much more comfortable holding this because I see that 5 analysts are going long, and or if you started thinking I should go short, and then you see like 5 people, or or analysts or whatever, are trying to go long, like, you ask yourself a question, okay, why do I think it's a short? And don't get me wrong, it's not like there's in times where 5 people could be wrong at the same time, right? But a lot of times we'll have different, kind of takes on things. So yes, you cannot copy trade. I don't care who you are trying to copy trade, especially NQ, MNQ, is going to be very hard. Um, so the best thing to do is, learn learn a strategy and then use that and replicate it. And that's all you need. And also, I promise you guys, you do not need to catch the whole move every single time. Catch a little bit of it. Every single day, you catch a little bit of green. Green is green, and nobody ever went broke from being green. So base hits don't, and I've said this at the beginning, don't compare yourself to others when it comes to P&L. That's going to rob you of your own journey. That's going to make you size up. That's going to make you FOMO. That's going to make you feel shitty about yourself. If you had a red day and you see somebody had a green day and you're like, oh, that's never going to be me, or this and that. Stop. My mentor taught that we should never post P&Ls. And he was in Wall Street, like I said, he's a retired market maker. He said, as long as we get a few banana peels a day, that's all that matters. Because it messes with your mindset. Even if you see really big P&Ls, it's going to start, uh, actually, I saw this on Twitter, I think it was like 2 weeks ago. You guys all remembered when one of the traders made like 1.8 million in 3 days, trading on with the prop firm. And I see another trader that posting the next day saying, I tried to do what so and so, did. And he's like, I lost all of my accounts. So he was up 14 or 13K per account, 5 accounts. And he tried, he got so, he had FOMO or like greed or something, like in a way it was inspiration, right? And instead of him pulling out the money, because it's daily withdrawals, he ended up losing all of the accounts. So best Discord, I don't even know where the unsubscribe button is anymore. My wife now called these groups my second family. My girlfriend says my PC is basically my wife. I know. I feel the same, guys. Like, we have, as traders, I think no one understands us, and we kind of gravitate towards other traders. Like I don't even know what to talk to people about anymore. None of my friends trade, so it's like when I'm with them, I'll start talking about trading, and they're like, "Can you just please talk about something else? Like just anything else, just you know." So I feel you. Let's see. Oh shoot, I forgot to continue to drawing. Okay. Is Daniel N here? No? Yes or no? Please. Damn, I've been on here for almost 2.5 hours. All right, Raska, you're not Daniel N, so now I gotta find one more person. Okay, I'm gonna pick two. So traders, well. So we've got two winners already. I'm gonna add two here, and then Mike B and Dan N. Man, Dan N again. Mike B, are you here? Yay! All right. Well, okay, fine. I'll do one more. I was told I am not the best businesswoman because I give away everything for free. Oh my god, what the fuck? That's too funny. All right, one more. That Dan guy is lucky. All right, Brady. Brady. Okay, no, Brady is already. Yeah, he's already in anyway. He's one of our trusted traders, so I don't even know why he signed up for it. He already has it for free. Adam D. I know that Dan guy got freaking lucky and he wasn't here. Isn't that funny? I identify as Dan. It's impossible to articulate what trading is like to people who haven't experienced the highs and lows of it. Excuse the pun. No, yeah, absolutely. I agree with you. And, our moods also like tend to change, and, that other traders understand us when we're feeling happy, when we're feeling sad, when we're feeling angry, and it's like our family members and they don't. So, all right, guys, if you can DM me. For the free 30 days. Or should I draw one more person? Okay, one more. Sire M. Not here. I saw him earlier and he left. Well, that's too bad. Eva, the Raska is, it's the other Adam, the one. He didn't win it. Michael C. I feel like I'm in a college, or not college, but like a classroom where like, you're doing roll call. Is there a Michael C here? One more? Okay, one more. Gotta mark them as absent. Jimmy P. Present, which one? CPR engines, which one are you? Uh, AJ, this link was posted almost 3 hours ago, so people were here and left, you know. Yeah, but you know, I mean it's that you need to be here. Okay, let's see. Oh, so CPR engines, you didn't win. Oh, I thought you were my Jimmy or something. I can't add you because this was already. Let's see. Addison T. Oh, Mike, that was you? Okay, DM me, Mike. All right, one more. Maybe I should just do like a free Discord for everybody. Sebastian S. He's not here. Sebas. Donna H. Raska, you're not Donna. Anyone here using Market Quantix? I don't use Market Quantix. Click new drawing. Nope, Brady again. All right, one more and I'm done. I've already given out 4 or 5. I don't even know how many. I don't know. Somebody asked on Twitter what that is about that. Jung P. Keep him spinning. Okay, I'm gonna draw 3 at this time. One better be. Watch 3 of them be. Anybody? David M. Devon K. Or is it Devin? Josh B. All right, Risk Beast. There you go. Which one are you? Yeah, she's not here though. Now. Trades. All right. Okay, well, there we have it, guys. DM me and I'll send you guys the this guy's cheating. He has 2 accounts in there. Dumb. All right, guys. Next time, okay? Guys, have any other questions before I get off this stream? Anybody? All right, thanks, guys. Have a good day.